In this video, I'm going to show you how I move money around, the different type of bank accounts I have, why I have them, so you can organize your business finances perfectly. So when your accountant is doing your books, they just love your business because everything is cut, clear, very, very simple. So this is a visual representation of how the money is being moved. It comes into, all the money goes into the operating account, like checks, payments, and stuff like that. And then it's put out into different accounts to pay different people or to pay different things. And then there's also another deposit account, but this deposit account's for anything credit card. So website purchases, if somebody paying their monthly subscription with a credit card, any credit card transaction will go here. And all the profits from this account, the credit card sales, goes back to the operating account. All right, so let me break this down step by step to show you how you can set up your business bank account and keep money. So why do a banking structure actually matter? It's a blueprint for your financial control. Money is a tool. It's not there to be spent. It's there to be used. It also prepares you for funding. It builds trust with lenders because you have nice balances within your checking accounts, and it avoids messy finances. So that way, when your money is coming in, it's all allocated into certain bank accounts and everything is operating on its own. Not everything is coming all into one account and you doing everything from one account. No, it's just a nice organized structure. And you could also maximize your credit opportunities dealing with multiple different banks. So the first bank that I have Chase Bank. And with Chase Bank, I have 3 accounts, 2 checking accounts, 1 savings account. The first checking account is my operating account. That's where all my deposits go in, the checks, any payments, deposits go straight into my operating account. That's where all the main money go in. The next account is my expense account. That's only paying my vendors and suppliers, my engineer, my expediter. If I have to buy material from ADI or Kitty, that's where that account is coming from. And then after that is my tax savings account. I save anywhere between 20 to 30% of the income into this savings account. So that way at the end of the year, whatever taxes I have to pay, I can pay it in full. And sometimes I have more money than what I actually need to actually pay my taxes. Then we can have another strategy with that, put that into the retained earnings to help grow the business. Or you can leave it there for next year. It's totally up to you. So now this is ideal if you're making quarterly payments. So if you're charging sales tax, then it's a good thing to keep your tax savings account money in that account and don't touch it. I don't charge sales tax. I just pay corporate tax. So whatever I have at the end is what I pay taxes on. And lastly, I set up everything automatically. So once the money come into the operating account, I either use a dollar amount or a certain percentage to go into all these other different accounts. My next account is I have a Bank of America account. The reason I have a Bank of America account is once the money come into the operating account, I usually send 30 to 35% into this account to pay my bills. So depending on what your monthly recurring bills are, you will have either a lot of money or a little bit of money depending on how you manage your income and expenses. So I just make sure I can either pay the credit cards off, or if I don't have enough money that month, at least I can pay the minimum balance. But I pay all my bills from this one bank account. And the good thing about separating your bank accounts and having a structure like this, where my accountant goes through my books, they know exactly what's coming out of each account. There shouldn't be no credit card payments coming from my Chase account. It should only be coming from my other bank account. However, I do have a Chase credit card where I do transfer from the Chase operating account, but that is the only credit card payment because it just makes sense. They're both together. I'm not going to send that from Bank of America over here. But what I do is instead of sending that amount to Bank of America to pay for the credit card, I leave that amount in the operating account to cover for the Chase payment card. The next bank I have is KeyBank, and this is where my owner's draw go, my profits, the profits of the business. So once I do my pricing, there's always a percentage that I want to take for myself. And this is where I put that money into this account. You could either take this money and do whatever you want with it, or you could put that back into the retained earnings to exponentially grow your business faster. But usually, depending on the situation, the month, and things like that, whatever I want to do for myself or the family, I would usually use that money just for that, in addition to running payroll. Because if you're an S Corp, you have to be on payroll as well. So I have a paycheck every Friday and also take distribution from the business tax free. The next account I have is Navy Federal and also Affinity Credit Union. A credit union will be one of the best banks you will ever work with. And what I have these accounts for is, well, the Affinity account more so. What I have this account for is my credit card processing. So if anybody's making a website purchase off of the website, it goes there. If it's a subscription coming in because somebody made a credit card payment for paying their monitoring or for their service agreement, whatever it is, any credit card payments will go there. So when someone orders equipment, the money is in that account to buy the equipment, and whatever profits is left over in that account from minusing all of the equipment that I need to buy for that month, the profits then go back into the operating account, into that Chase account. And the Navy Federal account, and if you're thinking about marketing or anything like that, I'd use use my credit cards for marketing. I don't use the checking accounts for Facebook to hit my checking account, Google to hit my checking account. I put those on a credit card. Actually, I put those on American Express, and I just budgeted out how much I could actually afford that particular month. So if I can't run, let's say if I can't afford to spend $1,000 per month, as long as I can keep the ads running at the minimum level, I'll do that. So when I get more money, I raise the ad prices. When I don't have enough money, lower the ad price, just as long as I can keep staying in front of as many people's faces as I possibly can. So here's how the money works. Chase has all the operating income. Then I set up automatic transfers to go to the Chase savings account, the expense account, the KeyBank account, the Key Growth account, the Bank of America account, and also the credit union has its own deposits coming from credit cards. So after it pays all the material, whatever is left in there for profits minus the material, because I still leave money in there for another order, I'll put that money all the way back into the Chase operating account. So that's how the money move in a particular circle. And I only set this up in two accounts, the operating account and the credit union account automatically. So the credit union account will send only 30%. Even if I want more, I'll just leave it at 30% to go back into the operating account. That's so I can still leave some change inside of the credit union. And then inside of the operating account, I'm just setting up 10%, 25%, 35% of the money that comes in here automatically, or just $1,500, $2,000, whatever the dollar amount or percentage that I allocate to whatever these accounts is, I set that up inside of these two accounts. So that way, anytime I put money into that account, I don't care if it's $100, because you could set the threshold. If it's $100, it will split that $100 up into percentages. But I use the threshold is $1,000. So I try to keep minimum in my business bank account $10,000. Sometimes I don't hit that mark, but it's good to hit that mark for a 90-day period. Then from there, you can just go and say, hey, I need money. No credit approval. So now getting into keeping a $10,000 minimum business bank account, that's because they have different types of bank ratings. So now a bank rating is what the bank give us depending on the amount we keep in our business checking account on a monthly basis. There's 4 different types of bank ratings. If you don't know what a bank rating is, that is how the bank rate us, depending on how much money we keep in our accounts. From overdrafts all the way up to $100,000, we will get a particular bank rating. So the higher limits you keep per month, the higher your bank rating, which will improve your chances of getting money from that bank without even asking. So the reason for multiple accounts or multiple business bank accounts is for the sake of building business credit, especially when you start. You can get credit cards from each one of these lenders or each one of these financial institutions. Once you walk into the business bank account and talk to a banker, you can get a high limit credit card anywhere from $25,000 to $50,000 just by opening up a credit card in this business bank account. Now, really quick, each one of these banks check a different consumer reporting agency. So let's say 3 different banks you go to, each one check one particular consumer reporting agency. You have the ability to go in there and get 3 credit cards, get 3 lines of loans, and potentially get up to $150,000 just by going into the bank your first week in business. Now, that's why it's very important to have good credit. If you have very, very good credit, it is easy for you to get lending, and we can show you what to do with the money so that way you don't fuck it up. All right. So I want to give you some final takeaways. This business banking structure is what I created because I figured in my mind I like to have things allocated in a certain place. I don't like to do everything all in one place. So I like to separate things. So that's how I came up with this particular structure. It's automated so that way you don't even have to think about it. Once the money go in, it does what it needs to do. You separate your accounts for stronger lending profile, because if you have different bank ratings in all these different banks, all of these people are going to want to give you money. So your opportunity to grow is exponential. So the multiple bank approach is for more credit opportunities, more lending, and more money. So the more products you have with these individual banks, the more money they're going to give you. So your bank account isn't just for holding money, it's a signal for serious business. So use the money as a tool, move it around into these different financial institutions so they could be like, hey, I like this guy, let's give him some money. Business A, business B, you're doing very well with yourself, keeping high limits, let's give him some money. He looked like he wants more money. So really quick, I want to go back to the framework. Let's go back to the framework, and I want to say you don't have to do this all at once. You can set this up your own type of way, but this is a particular structure I came up with that I found that works. It helps me organize everything. When I'm low in particular accounts, I know how to move. I know how to move accordingly. If I have to make a phone call to a supplier or a vendor or whomever I need to pay, I could also make that phone call because I know I may not be able to cover it. I need to get some time. So this blueprint is to give you a full picture of how you can actually manage your finances. You could also do this personal level too. All right. So I appreciate you for watching this video, and I'll catch you in the next training. Peace.